Hey everyone, welcome back to Corporate Decoder, the place where we unpack the truth behind the corporate speak and get a little sneak peek into what is really going on behind the scenes. Today we're diving into a filing that is kind of like an old relationship getting a renewal with some new terms and conditions. And let me tell you, it has some interesting twists. So what is the big news? Well, Enzon Pharmaceuticals Incorporated and Viskase Companies Incorporated are shuffling the deck on their merger agreement. It is not a brand new deal, but a significant update. And we're going to decode what those updates actually mean for the companies and potentially for us as investors or observers. This is a current report filed because something important happened. Think of it as a company saying, hey, just so you know, we've made a big change to a major agreement. This particular report tells us about amendments to an existing merger agreement and a support agreement. Essentially, they've tweaked the rules of their planned marriage. The date of this report is the 24th of October, 2025. This is the day these important changes, these amendments, were officially put into place. The main company we're following today is Enzon Pharmaceuticals Incorporated. They're incorporated in Delaware, which is pretty common for many companies, but it is just a detail about their legal home. This is their commission file number, just an internal tracking number for the Securities and Exchange Commission, or SEC. And this is their IRS employer identification number. Again, just administrative details. This tells us where their main office is located here in New Jersey. And this is the zip code for that location. This is their main phone number if you ever needed to call them for some reason. This section is just a placeholder indicating they haven't changed their name or former address recently. This box here tells us if this filing is also serving another purpose, like sending out certain types of written communication related to the deal. It looks like they've checked the box indicating written communications under Rule 425 of the Securities Act, which is common when you are updating people on a merger. This part is interesting. It lists securities registered on a stock exchange. Here it says none NA, which means at the time of this filing, Enzon did not have any securities listed on a major stock exchange under this specific section. This is important context for a company that might be looking to be acquired or merged. They are not checking the box that says they are an emerging growth company. This means they are likely beyond the initial startup phase and are subject to more stringent reporting requirements. This section is the heart of the report. It is where they tell us about the material definitive agreement they entered into. This is a big deal, a significant contract. So, on the 24th of October, Enzon and Viskase officially signed off on some changes to their original merger deal. They're calling them amendments. The original deal was struck back on the 20th of June 2025. These changes were made because Viskase, the company they are merging with, has had some recent developments in its business that they needed to account for. Think of it like this: if you are buying a house and the inspection reveals some issues, you might renegotiate the price or the terms. That is essentially what is happening here. Now, let's get into the specifics of what changed. This is where it gets interesting. This is a big one. The exchange ratio has been adjusted. This dictates how many Enzon shares Viskase shareholders will get for their Viskase stock. Crucially, the Viskase shareholders will now own 55% of the combined company after the merger. This means Viskase shareholders are getting a bigger piece of the pie than they might have originally agreed to. It suggests Viskase might be a more valuable or attractive asset than initially perceived, or perhaps it is a concession to keep the deal alive. They are also adjusting how their own preferred stock, called Series C preferred stock, will be exchanged for common stock. This exchange rate will now be tied to the average price of Enzon stock over the 20 days leading up to this amendment. This is a way to make the exchange fair, reflecting recent market value. Enzon needs to have less cash on hand when the deal officially closes. This could mean Enzon's financial situation has changed, or they're trying to make the deal more flexible by reducing the cash requirement. This is a significant operational change. Enzon is going to do a 1-for-100 reverse stock split. This means for every 100 shares of Enzon stock you own, you'll now have just one share. The value of your total shares would theoretically stay the same, but it drastically reduces the number of outstanding shares. Companies often do this to increase their stock price. Per share, potentially to meet stock exchange listing requirements, or to make the stock appear more valuable. It can also be a sign the company wants to fend off very small investors or is preparing for future financing. The deadline to complete the merger has been pushed back. They now have until the 31st of March 2026 to get this deal done instead of the end of 2025. This gives them more time, which could be good if there are still hurdles to clear, or it could be a sign that the process is taking longer than expected. This clause is really important. Enzon and its subsidiary are basically agreeing to overlook any past issues or breaches by Viskase that they knew about up to the date of this amendment. This is like saying, we know about these past problems, but we're willing to move past them for the sake of this deal. It shows a strong commitment to closing the merger. Even if there were some bumps in the road before, this one is a bit complex, but it is about what counts as a material adverse effect for Viskase. Essentially, if Enzon already knew about certain negative things related to Viskase's business before this amendment, those things won't be considered a material adverse effect that could derail the deal. However, any new problems that come up after this amendment could still be grounds for that. Again, this is about defining what can and cannot be used as an excuse to back out of the deal. This part talks about Icahn Enterprises Holdings, or IER, which is a significant shareholder. They've agreed to vote their shares in favour of the merger and to exchange their preferred stock for common stock using that 20-day average price we talked about earlier. This is important because it shows a key stakeholder is on board and making commitments to help the deal go through. Enzon is planning to file a registration statement with the SEC. This document is crucial. It will contain a lot of detail about the merger and is essentially asking Enzon shareholders for their approval. They need to approve the amended merger deal and a change in the company's name to Viskase Holdings Incorporated, along with that reverse stock split we discussed. This is good news for the deal's legitimacy. The amendments have been reviewed and recommended by special committees of independent directors at both companies. Then the boards of directors at both Enzon and Viskase have approved these changes. This suggests the deal has been vetted by people who are supposed to have the best interests of the companies and their shareholders at heart. Here is a potential strategic benefit for Enzon. They believe that by doing this revised merger, they can keep their valuable tax benefits known as net operating losses. These losses can be used to reduce future tax bills, so maintaining them is a big plus for the combined company's financial health. This is a standard legal disclaimer. They are reminding everyone that these amendments are just one piece of the puzzle. You need to look at the original agreements and all their other filings with the CC to get the full picture. Another legal point, they're saying this summary isn't exhaustive. For every single detail, you'd need to read the full amendment documents themselves. These full documents are attached to this filing. This section is about regulation fair disclosure. This rule ensures that when a company releases material non-public information, it does so to everyone at the same time. So on the same day, the 24th of October, the companies issued a joint press release to announce these amendments. This is how they make sure the public information is out there for everyone. This is a very common and important disclaimer. It essentially states that this specific information, including the press release, is being provided for informational purposes and is not considered officially filed with the SEC in a way that would make them liable under certain sections of the Securities Exchange Act. It means they are giving you the information, but they are not taking on the same level of legal responsibility as if it were a formal financial filing. This section alerts investors and stockholders about crucial information related to the deal and where they can access it. This is a stern warning and a very serious reminder. They are telling everyone that this current communication is not the final word and that the upcoming registration statement on Form S-4 will have all the critical details. They are strongly urging investors and stockholders to read that document thoroughly before making any decisions, especially about voting. This document will be the ultimate guide to what is really going on with the merger. They are directing people to the SEC's website, www.sec.gov, to find this registration statement and other important filings for free. Once it is filed, it will also be available on Enzon's website. This is standard practice, guiding people to official sources of information. This part identifies who might be involved in asking for votes or consent for this merger. They are listing who is considered a participant in this process. This includes the companies themselves, their directors, top executives, and some other key employees. This is a legal disclosure to let people know who is actively trying to get shareholders to approve the deal. This is another critical legal safeguard. They are making it very clear that this communication is not an attempt to sell you any stock or to get you to vote in a specific way right now. It is also not an offer to buy or sell any securities. They are saying very plainly you can't offer or sell securities unless it goes through the proper registration process outlined by law. This is a vital section that basically sets expectations about statements that are not about current facts. This is a classic look before you leap section. They are warning everyone that any statements in this filing that talk about the future, like what might happen with the merger, projected benefits, or future plans, are just predictions. They are based on current guesses and assumptions. These predictions are not guarantees. Things could turn out very differently because of all sorts of risks. They list out many of these risks, like not getting approvals, delays, Viskase not providing needed documents, the deal not bringing the expected benefits, lawsuits, business disruptions, losing key staff, and bad reactions from customers or suppliers. They also mention external events like economic changes or global crises. They explicitly state they can't promise the deal will go through or that these predictions will come true, and they're not promising to update these predictions if things change. This is extremely important because it covers their legal bases and tells investors to be very cautious about relying on any optimistic future outlooks. This section is where they list all the extra documents attached to this report. This part just specifies that they are listing the exhibits. This is the actual document that modifies the merger agreement. It is like the revised contract. This is the same for the support agreement that involves Icahn Enterprises Holdings. This is the joint press release they issued to announce these changes to the public. This is a technical file format used for electronic filings to make data easier for computers to read and analyze, often used by the SEC. This is the official sign off on the document. This is a formal statement that the company is officially signing off on this report as required by law. This identifies the company signing the document, the date the report was officially signed. This indicates who signed it physically or electronically, the name of the person signing, and their role within the company. Richard L. Feinstein is wearing a lot of hats here, acting as the top executive, the head of finance, and the corporate secretary. This is not uncommon in smaller or mid-sized companies, but it does mean a lot of responsibility is consolidated. Alright, let's zoom out and look at the bigger picture here. What we've seen today is not a company announcing a brand new merger, but rather a significant adjustment to an existing one. The key takeaway is that Viskase shareholders are now going to own a larger piece of the combined company, 55%, which is a pretty substantial shift. This, coupled with the extended deadline, suggests that the original deal terms needed some recalibration, likely due to Viskase's changing operational landscape, as mentioned in the filing. The reverse stock split is a particularly interesting move by Enzon, while often done to boost a stock's per share price in the context of a merger like this. It could be aimed at making Enzon's stock appear more substantial, or perhaps meeting certain listing requirements for the combined entity, especially if they are planning to list on a more prominent exchange, or even just to make it look more stable. The fact that both companies' independent directors have signed off and their boards have approved these changes is a positive sign. It indicates a level of diligence and consensus. The legal disclaimers and cautionary statements are standard but very important to heed. They are essentially saying this is what we think will happen, but many things could prevent it, so be careful. Looking at the implications, this amended deal seems to prioritize getting the merger completed. By waiving certain known breaches from Viskase and clarifying what constitutes a material adverse effect, Enzon appears very committed to this path. The potential to retain Enzon's net operating losses is a smart financial play that could benefit the combined company significantly down the line. So, what is the verdict? This filing shows a company navigating the complexities of a major deal, adapting to new information and making strategic adjustments. It's not a story of perfect execution from the start, but one of practical adaptation. The success hinges on whether these amended terms truly create a stronger, more viable combined entity, and whether the risks outlined in the forward-looking statements can be successfully managed. We'll be watching closely as this unfolds, especially when Enzon releases its Form S-4 registration statement, which should provide a much deeper dive into the financials and the full operational picture. What is your take on these amended merger terms? Do you think these changes make the deal more robust or point to underlying challenges? Let us know in the comments below. If you found this breakdown helpful, please hit that like button. It really helps us out, and make sure you are subscribed for more in-depth looks at corporate filings. Don't forget to join our Discord community linked in the description for more discussions. Thanks for watching, and we'll see you in the next decode.